The zinc supply is facing a massive deficit. Mine closures are certainly putting a major upward pressure on the best performing metal of 2016. Right now, China has temporarily shut down 26 of its zinc mines until June of 2017. Zinc inventories are at their lowest level since 2009, and the zinc fundamentals could not be any more favorable as the world is facing a worldwide supply shock. The former president of the largest gold producer in the world just left the company to join a junior mining zinc play that is currently sitting on $9 billion of zinc and rising. Learn more about this incredible opportunity at crushthestreet.com/zinc. Greetings and thank you for joining us at futuremoneytrends.com. What a year it has been in the precious metals. Not only seeing the birth of a new bull market, but to see what the mining shares have done, and then to look at a long-term chart and to realize we're barely off the bottom. We are not even to the 2014 levels when you look at a chart of the GDXJ. We are going through somewhat of a correction here, and I wanted to get an expert on the line. And I'm very happy to speak with David Morgan of the Morgan Report. He's been a friend since literally we started Future Money Trends, and certainly a mentor. And if you guys follow his letter, you watch his interviews, and certainly you subscribe and get his silver stock suggestions and other resource stock suggestions, I don't think you'll do better. And I say that as a newsletter writer. I don't think you're going to do better. David is completely unbiased. He, believe me, is very, very passionate about every single one of his subscribers. I'm so happy to be able to talk with him today, and also congratulate him on a new company that he started, that's a streaming royalty company. So David Morgan of the Morgan Report, thank you for joining us.
Well, Daniel, thanks for having me, and I'll make a slight addendum. I am biased. I've been pro-honest money for a very long time. And, you know, as far as being objective on the mining stocks, resource stocks, you know, when you look at them all, I mean, we've had lithium, we've had cobalt, we've had, you know, we even have an energy company, we had a drilling company. I mean, we've had everything across the board. So as you said, it's not just silver stocks, although there are some, of course. And of course, we focus primarily on the resources as a whole, but biased, I guess, is a good word, toward the precious metals, because I think the recovery is a joke, and I think the next leg up will be led by the precious metals, and I don't know how much of that's really going to spill over into the general commodity sector.
You know, David, I guess a lot of us think of you as silver. Because when you start learning about precious metals, and ultimately you learn about silver, and then now here you are at 2 a.m. researching the rarity above ground available supplies and the deficits, you come across the Morgan Report, and you come across videos you've done going back, 2006, 2003, earlier than that, and so, I mean, I think when I think about like who helped me with my awakening, like let's say politically, I think of Ron Paul. When I think of like who helped me with my awakening with precious metals, I think of David Morgan. So let's ask you. Let's start with precious metals. So we're seeing a little bit of a correction. We saw a little pullback in May, a little pullback in July. And here, I mean, it's end of August. There's not that many people around, but they're certainly moving, and it's certainly a gut-wrenching moment for precious metal investors right now.
Right. Well, all markets ebb and flow, manipulated or not. They go up and down. And, of course, you know, people ask me about manipulation. And I actually haven't said it in a long time. My take is that the long-term trend cannot be manipulated, but within the long-term trend, they can manipulate the heck out of it. And that's happened several times. Now, is this, you know, 4 or 5 year correction we saw in the silver market normal or abnormal? I haven't really made up my mind. It's normal that a market will correct. It's a very similar thing happened in the 1970s bull market, and that was fairly much orchestrated as well. I mean, gold from the fixed price, which really wasn't 35 because it had been adjusted to 42.22, check the record. But it went from that price to almost 200 and down to 100. And I was in that market, and a lot of people had given up and thought it was over. And then from that point, it went up and down and up and down and up and down, but the trend reversed from a downtrend to an uptrend and ended up at about an 8-bagger. Gold peaked around the 850 level January 21st, 1980. So this market has done something similar, although it's a longer duration on the downside. But the upside, I think, is it's indeterminable. I mean, the reason you can say you can't determine a paper price is we don't know what's going to happen in the fiat currency system. And depending on what takes place, it may be meaningless to put a number on it. But, I'll go along with Jim Rickards and the others, saying 10,000, Nick Barashef, 10,000. I'll stay conservative and say 5 anyway. But we've got a lot ahead of us. But that doesn't mean that we're not kind of in need of a correction. And I'll just continue on a little bit, Daniel. I know you're very good about, letting whoever you interview speak their mind. The silver situation right now is that the stocks going back at their peak just 10 days ago were pricing silver at $25 the ounce. And silver was at roughly $20 the ounce, which means that the stocks were ahead of the game. So you can look at it a number of ways, but the two primary ways to look at it is the stocks are forecasting that silver had to make a big move up to catch up to the valuation of the stocks, or the stocks would start, bending over and coming down, and there would be a correction. That's the way I have told my subscribers. What we have is unique in the industry. I don't know anyone else that does it. And if someone says you're wrong, tell me, but we have an alert system. So if you're a premium member, and we don't have basic membership anymore, we let everyone that was on the report, when we moved to the Morgan report, lock in their price if they wanted just the basic letter. But everyone that subscribes now gets the premium service, which means they get the basic letter, excuse me, and the pop-up window, this alert system that we wrote, that we did the software on. So it pops up on your screen, and you don't have to install it. Most people do, and it says, we've got an alert. So if something happens in one of the companies, we'll send out an update. If something happens in the market, we send out an update or perhaps an alert. So I have been stating for the last few weeks that I saw a correction, and I've been making videos more often than I normally do. I do it on an as-required basis. I don't want everyone to think, on Friday at 3 p.m. I do a video, because that's just not my philosophy about the markets. The markets dictate, and know more than anybody. And because of that fact, I do them on an as-required basis, but there's been so much movement. So long-winded statement, I still think we're going to see more of a correction. I think we'll get to, equilibrium where the mining shares are reflecting, $20 silver or 18, wherever it bottoms out. And then we're probably going back up. What's so unusual is when the volumes are really good, the Commitment of Traders report shows massive amount of open interest that really hasn't been resolved, but we'll have to get Friday's report to see if there was any kind of substantial sell-off this last few days in the futures market. And the interest in the mining shares has been phenomenal. We were talking off air before we started the interview, and I think you should talk for a moment and let people know how many private placements have been done in the last several months and what that could mean.
Well, let me ask you about that, because we were talking about before the call, but there's about 600 private placements since April 1st, actually over 600. Many of these people, if anybody listening to recalls, the mining shares really started moving in February and March, but then of course we saw literally from the May pullback, from March to May, it just went straight up, and then it corrected and then went right back up to July through this correction that we're at now. So. David, let me ask you about that. These private placements, people are financing these companies 15 cents, 25 cents, 50 cents. Now these companies are literally, 3, 4, 500% higher. Is this a certain headwind we're going to have to work through, for the next 75 days? And I have to imagine that if gold goes up and silver goes up, it probably would make this a much easier. But if gold and silver are just flat, it certainly could be a drag on the mining sector for at least for till let's say November, right?
Exactly. I think it is a headwind. The metals are clearly, I have enough data now to say this with authority, they're in an indecision pattern. We've got a sideways pattern or channel formation, and that's a clear indication of what I call an indecision pattern. So the market and gold and silver could either break to the upside and continue on, the shares would probably follow, or break to the downside and the shares would probably sell off even further than they have. That's what I see most likely. And the reason I see it is we need a breather almost. I mean, as bullish as I am, it's like, a runner or some athlete. I mean, you've got to, have that time off and catch your breath, so to speak. So that's kind of where we are. I think it'd be healthy. I don't want to see a big correction. I've got too much invested, but regardless, I'd like to see it happen. And,
Sure.
I'm looking for the support levels. As we said off air, I mean, even the $1,300 level on gold has really held strongly. And we're about $20 above that as we're doing the interview. And I'll tell you, from my experience of a lot of years in this market, I'm certain that the powers that be will try to test the $1,300 level in gold. If they succeed in getting it below that level and keeping it below that level for a few days in a row, then you might get more of a sell-off. I mean, even the trading funds use an algorithm. So at certain levels in the market, they'll just sell. They don't have a fundamental belief in the metals. They don't have anything other than a computer program.
David,
Go ahead.
how do you think Wall Street and the perception will be on the trade of the presidential election this year? Because it is a unique election. I mean, essentially you've got the oligarch's candidate, and then you got a guy who basically wants to kind of put his middle finger at the system. I don't know which one is more bullish for gold, though. What are your thoughts?
I'm with you. I really don't know. I mean, to me, I'm so disgusted with the whole political class that I don't think it makes a lot of difference. To me, it's sort of changing the captain on the Titanic. Yes, I mean, there's words and music made by Mr. Trump that some of it I would probably go along with, but talk is cheap. I'm a big believer in show me, don't tell me. I mean, even if you go back to Obama, I mean, I just figured from my perception, the way I saw it the first time, it sounded terrific, but I just felt that it was all talk and no action, and the most transparent government, and we're going to end the wars and all this stuff. Sounded great. Sounded almost libertarian if you go back and really listen to it. But I just said, show me, don't tell me. I don't believe a word of it. And of course, I was right, being as cynical as I am. But so, Dan, I don't think it really makes that much difference. I really, really don't. I know there's a lot of articles on the internet about it's going to happen if Trump gets in, and this is good for gold and all that stuff. Look, what's good for gold is the end of empire. And we've got governments that are failing. And that's sovereign states. When these bond markets blow up further, that's where you are going to see more of a run to gold than we've already seen. I mean, what you said is absolutely correct, which is that these shares have moved a great deal, but if you look from a long-term perspective, they're just barely getting going. And wait until the physical market freezes up, which could happen. I'm not saying it would happen, but it certainly could. With a worldwide demand and a failing currency across the world, where do you think people are going to go? They're going to go to the precious metals, what's been trusted for thousands of years. And when that market seizes up on the small or on the large scale, you might be able to buy a bag of junk silver or 10 bags of junk silver, and you might buy 1,000 100-ounce bars. But Eric Sprott and the Zurich Continental Bank and some of the large ETF holding companies, Central Fund of Canada, they might not be able to lock in 20 or 30 million ounces of silver because you just can't get it in size. And the same thing applies to gold. So if that were to occur, and I think it could happen, I'm pretty strong on this, then where are people going to go? Well, they'll go to the next best thing, which means can you imagine the amount of money sitting on the sidelines in a panic mode that would go into the mining shares?
Absolutely.
I mean, it'd be incredible. And so this is kind of a scenario. Is it going to happen? Well, David isn't saying it's going to happen. I'm saying it could happen, not would happen. But I saw it once with, my age, and I saw what happened with gold and silver when it was a panic buy. I had a commodity. I'm going to digress a bit. I know we are getting near the end. My commodities broker was a woman. She worked for Dean Witter, no longer a broker. And she was very savvy. You know what she's doing during the last couple of weeks of the gold run? She would leave her office at lunchtime and go and buy gold at the local coin dealer. And then after she closed her office, she would stand out in her front door and sell gold coins to people that were lined up, believe it or not. That's the kind of frenzy you get at the top of the gold market.
Wow.
And that was in 1980. So imagine what will happen if there's that kind of panic. And I think it'll be a bigger panic. And the reason I say that with some strength is the fiat system is beyond repair at this point. I mean, if any of the QEs worked, we wouldn't be where we are. If they're not working and we're in negative interest rates, you're going to loan money to get less back as it's depreciating. Think about that. Is that insanity?
It is, and I know you're an economist. You want to cite all the different examples over the last few thousand years of negative interest rates?
Yeah, there aren't any. I mean, you don't see it. So this is unprecedented. They're trying everything they can. It really, if you look at it objectively, and I think I can, it shows you just how desperate they are. I mean, the idea was if we give people negative interest rates, if you're losing money, then that will stimulate them to not loan and go spend. But we're at the reign of plenty. We have more than enough in the Western cultures, not necessarily in places that have, problems. And I'm well aware of that. Believe me, I'm world traveled. I see what the real world looks like, not just, the States. But looking from a Western perspective, we have too many brands of pickles, too many brands of ice cream, too many, clothes, too much. And nature is way out of balance. And so is the retail chain. And so what do you see? You see Macy's closing 100 stores. You see all these chain stores. The retail market is dying, and they blame the internet, and that's partially true. But overall, you can only gobble up so much stuff. I mean, Americans have got, these storage facilities because they got so much stuff, they can't put it in their house and their garage. They've got to rent a box to keep more of their stuff in. I mean, think about this. This is not balanced. This is not normal. This is abnormal. And nature hates imbalance. And we are very, very imbalanced in almost any perspective, from the micro perspective, a single household, to the macro perspective of a nation state, from even a global perspective. And there is a day of reckoning, and I think it's coming sooner than later.
David, in closing, as we do this interview, the central planners, all the sociopaths of the world are meeting in Wyoming. What do you think they're thinking right now? I mean, they are in the worst possible situation with negative interest rates. Now, they've done very well and successful with the propaganda, as you've noted. They've got everybody thinking that actually the markets are at all-time highs and things have been normalized, even though, look, things are not normalized when you have negative interest rates or zero interest rates. What do you think they're thinking right now? Because it seems like the end game, whether they plan for it or not, it's getting very, very close.
Right. Well, first of all, let me preface it by saying I'm pretty close to Dr. Michael Berry and have been for years. And he and I do have a good heart-to-heart now and then. And he speaks at the Fed meetings occasionally. I think it's twice a year or once a year. I think it's twice a year. So I've kind of cornered him and really dug as deep as I can. And he basically told me face to face that they don't know what they're doing. But I want to add on to that. These people are very selfish. They're not altruistic at all. They're not looking after the citizenry. They're not looking after the nation state. They're not looking after their community. They're looking after their own selves. So one, they don't know what to do. That's obvious by their actions. Show me, don't tell me. Well, they're showing us with negative interest rates. But the other part is probably planning on what they're going to do for themselves to sidestep the further problems that are in the near term. That's probably what they're looking at. And of course, then there will be discussion about, well, this isn't working and that isn't working. What else can we try? And they may come up with something new. I mean, maybe they'll, stop, they might do a rebate for certain people in a certain tax bracket, or who knows. What they're going to try to do is stimulate the economy. What's going to happen is when the bond market starts to keel over, there'll be a mad rush to get out of the best market that's ever happened for the last 30 plus years, which is the bond market. If you want to sell in the strength, if you're in the bond market, I'm not a financial advisor. I'm a researcher that writes on the economy and the precious metals and resource stocks. But believe me, I've had a pretty good handle on what's going on, and I would suggest, and I'll tell you what I've done. I haven't had a bond in a very long time, and if you're in the bond market, I'd ask you to consider very carefully if you want to remain there much longer.
David Morgan, certainly it's been great to hear you. I like this new fired up David Morgan. Man, we certainly called you at the right time. We got to do all of our interviews in the morning. David Morgan of The Morgan Report. I urge all of my subscribers, go to themorganreport.com. I'll have a link for you guys. Make sure you subscribe. You're going to want
Daniel, let me interrupt you. Sorry, but
sure.
The site's new. Some of you may not know that. It's themorganreport.com. Just get in there and get on the free list. I've got 2 movies for you. The first movie is The End of the Age of Empire. It's called The Four Horsemen Film. And the second movie is The Empty ATM, which shows you a documentary from 2001's Argentina's currency crisis. Because one of the questions I get asked all the time is, what does it look like? This is a documentary of exactly what happened. So it's not somebody's opinion of what it looks like. It's exactly what it did look like. So I think that's a benefit. Both of them are free. So if you just go to themorganreport.com, put in a name and an email, you'll be asked to verify you're really a person and not a web bot. And then you'll get access to this report with these 2 movies in it and a lot more.
Awesome. Well, thank you very much for that. We'll have the link for everybody. Again, David Morgan of The Morgan Report, thank you so much for your time.
My pleasure. Thank you.